We continue our discussion on accounting equations, and once again we'll take an example, a set of transactions, and we'll convert these transactions into accounting equation. We know that accounting equation says that at any point of time the sources should be equal to the assets. So started business with cash, so the business is receiving cash and 400,000, and the source to that extent is the capital. So capital is a money contributed by the shareholders or the owners, and cash is an asset. So at that point of time the assets of the company are equal to the sources of the company, which is 400,000. Purchase stock on goods on credit. So it's a credit transaction according to the accrual concept, which is a recognition principle. Both cash and credit transactions should be recorded at the time of the happening of the event. So the goods are purchased on credit, so there will be a creditor, which are also called payables, and if the goods are sold on credit, there will be receivable, which are also known as debtors. So in this case the goods have been purchased on credit, so because of the accrual principle we record it, and there is a stock of goods, and the stock of goods is equal to 100,000. So, and it has been received on purchase on credit, so no change in the cash, and no change in cash remains same. No change in the capital, no change in the capital. However, there is another source, and the source is 100,000, which is a creditor. So increase in the assets here resulted in creation of a creditor. So the total of the sources equal to the total of the assets, again 500,000. So after every transaction we can see that S is equal to A. Now purchase stock for cash this time. So cash reduces by 75,000. Cash reduces by 75,000, and stock increases by 75,000. So the total of the sources is 500,000. No change in the total, but the composition of the assets has changed. No change in the capital, no change in the creditor, and so no change in the total of the sources. In this transaction there is a change in the composition of the assets, cash converted to stock. So we can see that because of such an accrual principle, both cash and credit transactions are recorded. Now sold 30% of the stock. We have 325,000. So sold 30% of the stock. So we'll have 60% of the stock. 60% of the 70% of the stock will be there after this transaction. The increase in the cash to the extent of the sale, and the sale is 150,000. So the changes in the composition is there along with the change in the total. No change in the capital, no change in the creditor. So the balancing figure will be treated as a retained profit, because as on this date the company has not distributed, so we call that as a retained profit. So the total of the sources side is also 597,000. We call this as a retained profit because whenever there is a profit, profit is distributed or profit may not be distributed. If it is distributed, it is called dividend. If it is not distributed, that is retained in the business, and that becomes a retained profit, which is the case here. However, the next transaction says the company distributes the entire dividend, entire profit as a dividend. So, when the profit is distributed, so the distribution of profit is called dividend, and the dividend is given to the shareholder, and the decision to give dividend is generally done by the management. The shareholders have no right to demand the dividend distribution. So now let us see, because of the dividend, cash reduces to the extent of the amount of dividend, amount of the profit. No change in the stock, so the total assets is 500,000. No change in the capital, no change in the creditor, and now the retained profit becomes zero because entire profit has been distributed, and so the total of the sources is 500,000. So whenever a company makes profit, the management has to take a decision whether to distribute or not to distribute. If the profit is distributed, there is a reduction in cash and reduction in the retained profit. However, if the profit is not distributed, then profit remains in a business, and that is called retained profit. Now if you convert this equation of this last equation, let us take this last equation as the base and put that as assets is equal to equity plus liabilities. We know that this is the equation. So assets of the business at the end of this year, at the end of this period, or at the end of this set of transactions is 500,000, and equity is capital plus retained profit, and liabilities is a creditor. So therefore assets of the business is financed by equity and liabilities. In this case, equity is capital plus retained profit, and there is no retained profit because entire profit has been distributed as dividend. So converting a business decision or set of business decisions into accounting equation is what we have seen here, and we did it by using important assumptions or accounting principles called business entity concept, the accrual concept, and matching concept. For example, while finding profit, we have determined the corresponding cost of the goods sold. Thank you very much.